All right, everyone. Welcome to a cameraless This Week in Crypto show here, our first of August 2023. Hope you're all staying safe and warm and doing your best to navigate these tricky crypto markets that have been slumping over the past, give or take, 2 weeks or so now. Ever since mid-July, there's been a bit of a lull in the markets, and obviously many different assets are declining once again, with a few exceptions, of course. Even as we speak, I'm seeing Shiba doing another mini pump. Apecoin is up there. There's some meme coins that are showing some promise. Solana is having a little bit of a run as well. And I'm joined here with our founder, Maxim, today. Brother Max, how is everything on your end? What are you seeing as of late here with the markets?
It was great to be able again on the stream, which is not always the case here.
Yes, always good to have you.
So we do have a kind of darkening environment around, despite of fundamental troubles. There is okay, it's mixed. Yeah, there is enough predictions which say okay, we'll go down. So it makes me feel, as always, as contrarian, okay, a bit more relaxed. If there is already expectations of going down. At the same time, Sailor is MicroStrategy buying big bunch of Bitcoin and announcing it will do it more. It's not what I like. One of the influencers we're following publishing positive Bitcoin forecast, and then Cointelegraph publishing how good Bitcoin will pump. This I don't like. Yeah, so it has to be relieved or be removed from media environment in order to strongly go up. So this, my perception, might be open to either sideways or a little bit dive down before we go up. And I try to keep positive bias towards, okay, should visit 2,400 Ethereum, bit below 40,000 Bitcoin, if even it's getting more complicated. Yeah. I would expect public media to turn negative. Kind of stubborn. I don't like it. Yeah. We'll see on the data. The good signs, of course, are that the curve was saved by a bunch of crypto OGs, and was able kind of raise, not even raise, but well, money was were raised and they used to buy back, but it was substantial, 40 millions, 42 millions as in around. Many projects and personal people who participated, bought, and it's good to see. Yeah, good to see after quite long sliding market. It's not what you expect, but it worked. So it's on the bright side. Yeah. Because if it would collapse, well, it would be. I mean, it wouldn't destroy it if Luna didn't destroy this. By no means would destroy it. But it will be very painful, very painful process. I think it was 150 million on our loan, which could get stuck there. And in the short, we should open or be open to possibility sideways of going down before we reach the goals, which I keep repeating here whenever I go online. I'm looking forward to 2,400 Ethereum, and yeah. I might change one day my opinion if we see price going down and this public media is still very positive. Okay, so okay, whatever, I give up. It's not an environment where I stay confident. But for the moment, I'm okay. I'm still fine. Sorry, I was thinking it will be 10 seconds, but you know, when this week was very intensive. My goodness.
Yeah, of course, yeah.
And we will share. I'll send you the link to chart layout. Interesting data. You can see on the level of data or chart layouts available on Sunbase how redistribution happens between different stablecoin pools and how it flows, and it's hundreds of millions. It's really quite impressive. So. It's functioning market, yeah, even under stress. Yeah.
Mm-hmm. And we'll be touching on a few of your special topics that you just went over, including some wrapped Ethereum analysis and looking at some stable coins as well. As far as Bitcoin, obviously, it's been a bit of a, I guess I'd call it a disappointment, even though there really wasn't any movement at all in either direction. Just a 0.25% decline over the past week, which is essentially nothing for those who've been in crypto long enough. But it wasn't so much Bitcoin that was the story. It was, Litecoin having a bit of a disappointing halving. You can see it here, dropping 8.5% over the past week, with the actual day occurring just a couple of days ago. A little under 48 hours ago is when it happened. And yeah, it appears that at least for the short term, the big event was a bit of a dud, and there wasn't enough, I wouldn't say enough enthusiasm, but there wasn't enough positive return for people to really feel like this investment in extra Litecoin, with the anticipation of there being more difficulty mining it, that didn't pay off in an investment way. It seemed to actually go the adverse way, where it was a bit of a buy the rumor situation, sell the news. And Litecoin was one of many in this region of market caps that really just performed a bit disappointingly. You can see Polkadot dropping about 4%, Matic dropping another 5.5%. It's really been struggling. Solana a little over 6%, Cardano 5%, Dogecoin 4%. These are all top 20 altcoins that just did not perform the way we were expecting. Shiba did see about a 5.5% return, but you can see here a lot more assets like Bitcoin Cash, Avalanche, Toncoin, Stellar, Chainlink. All of these assets declined, and there were a few exceptions, as there has been throughout this kind of lull that we've seen here in the middle of 2023. With Maker up 13.5, Optimism 15.5, Sinfin 37.5. That was the biggest, and 26.3% for Caspa, which is a new entry onto the top 100. We have not seen it up here before. But yeah, overall, we're seeing a continued decline in the market cap, not a severe one, less than a full percentage point, but volume did go up about 8%. And as far as social volume, you can see that there is starting to be a little bit of an uptick in discussion rate. Maxim, I'm curious, this could just be an anomaly, but Ethereum had a big jump in discussions this week compared to last week at 27% increase.
Interesting.
Do you think there was any reason for it?
Definitely there should be. Let me just check if it's true. You can look at those data different ways. So I go to my setup where I have social dominance for Ethereum. Yeah, it did increase. It did increase indeed to actually 8%. It means, what number do you have?
It says 27% rise compared to the week before.
Compared to the week before. What the date was the last week? It's kind of July 29.
I believe. Yeah, it's the 29th.
Yeah.
To the 4th.
Okay. Yes, possible. Well, just the last week was low. I would blame it. If you open one of the chart layouts where, let's say, I will share one link with you now in our Discord, and you can share the screen.
Sure.
You will see what I mean. So, okay, open this chart. And by the way, those on the screen, you can always ask us in Discord links to this chart layouts. You can use it for yourself. We built for people, but it's built by us. We're using it daily. So scroll down, next one. Yeah, no, not this one. This one is fountain rates and stuff. Yeah, here. This is social dominance talks related to Ethereum. It did grow, but you see, it was growing from pretty low values. That's probably the reason. Not that it became very dominant in crypto space, not yet, compared especially to previous highs, but it was the previous values were very high. Or the previous values were quite low. You see, at the end of June, July, it was not Ethereum was on a radar. Now it's back. People talk about Ethereum, but it's normal. I think if you look at this chart, it's nothing extraordinary.
Yeah, it's kind of just a natural rise.
Yes,
You're right. Since
just
late
it's
July.
oscillated. I mean, it goes up, goes down. So it's a
Right.
normal value. I never analyzed or never tried to analyze in detail what is the correlation, if there is any correlation or even better causation between social dominant stock and the price of Ethereum. Maybe this alone not. But exactly, actually, you opened a very good chart. It's one of those good signs. I still keep it very low historically gas fees. So for whatever purpose, even despite, okay, there was a bit of spike during curve drama, but then it came back to normal. It does not look like that.
Yeah, the usage on Ethereum overall does appear down across a lot of different metrics. And when that happens, we'll often see the average fees kind of come back down to earth to kind of invite people to start dipping their toes into using the network. It's funny how the fees work, but yeah, ever since that big May spike, it's back down. It's almost to year lows here at $1.69 per transaction right now.
Exactly. That's normal price. Even though now I think because of importance of Arbitrum Optimistic and Polygon, we should incorporate them and see fees which is being paid on that networks and to combine them. I do believe, and I see myself on Arbitrum quite a lot of trading activity or stable coin also a little bit, not as much, of course, as still most stable coins are on Ethereum, but trading quite a lot of Arbitrum. Regardless, this low utilization of relatively low. I mean, the network is still busy. It's you still pay a substantial amount of money, but historically it's very low, and it's more coincide with the bottoms or shortly before the bottoms. Doesn't look puppish.
Yeah, absolutely. So Ethereum overall, I think that I see velocity is picking up a little bit. Dormant coin not doing dormant coins and mean dollar invested age not doing a whole lot right now. And then you've got the long-term traders that are still up about 11%, 30-day traders down 2.18%. So it's kind of sitting around neutral, but I think it's largely been ignored here for a couple months now, as so much of the attention has been kind of shifted toward, XRP, of course, for the month of July after its big news, and then just random altcoins that are trying to make their runs, of course, Litecoin and its halving. But yeah, I think Ethereum has been one of the more overlooked assets probably ever since it dropped back below $2,000 in April. That's kind of, I mean, the mentions of it are very low. So maybe we'll even look at it further here on this call. But, as we often do, we can pivot our perspective over to Bitcoin, see what's going there. And, it's been awfully boring, I think, for a lot of traders. Excuse me as I sneeze there. If we look at transaction volume, I'm seeing declining ever since June 20th, the last couple of weeks. Less and less usage. On-chain transactions are pretty much down to pretty much at its year lows right now. Trading volume, you can see as I highlight here, very neutral. Transaction volumes actually down on both the BTC side and the USD equivalent side. And then I do see this anomaly, Maxim. Daily active addresses have quietly been rising. And I reported yesterday the amount of active addresses, 1.07 million. This was the highest since April. It was 3.5-month high. So that does seem to be promising. This isn't like an anomaly spike. It's more of a gradual, looking at this trend.
It's
been climbing for a while.
Into it for a long time, yeah.
So that's something. I would call that encouraging for the bulls, right? Because when you see a gradual rise in utility, the amount of unique addresses that are actually interacting on the network, it's showing that the network is starting to heat up a bit. And over time, if we go back 8 years or something, just to give perspective, you can see how much the rise in daily active addresses here can foreshadow these big price upswings that we see. Not all the time, it's not a perfect correlation, but in general, a network needs to see more active addresses and to an extent more circulation in order to grow. But I see more correlation in active addresses and prices pumping than anything else. And it's so important to see kind of what we're seeing right now in a mini perspective. In order for us to really feel confident that a market cap can grow, obviously we're sitting at 29, a little below 30 at the moment, but if you continue to see this trending upwards and we're getting lots of 1 million plus days of Bitcoin's daily active addresses, I would feel encouraged that this lull below 30K is only temporary.
Especially
Now,
if we need to look into more details, who's accumulating. If these movements are happening, is it like small hodlers who is buying, then it's not good sign. And if it's again bigger whales, then of course it's a good sign. Yeah.
Well, let's take a look at that really quick, and we'll come back to MVRV and some other things. But as far as the smallest addresses go, if we're just looking at the percentage of available supply that's being held right now, we see that the smallest assets are doing their usual climb. We saw this interesting dip here. Let me show with the price on so you can see some context. So you see how the yellow line here, I like to look at the small addresses as almost an inverse correlation. So they're always going a little bit up, but when you start to see a dip like this, I've noticed that's actually foreshadowing rises a lot because it means that the small addresses are transferring over to the larger addresses. And the yellow line, for whatever reason, is maybe one of the better counter indicators out there. This drop foreshadowed this rise. And then you started to see this rise since July 11th or the 10th or so. And that's been correlating with a Bitcoin drop. So we want to actually see this yellow line start to drop again. The red line is dropping.
That's the point, yeah.
A little.
Ideally, I would like to see it going down.
So disinterest from those micro addresses means that there is more interest from the larger ones. And if we add those on, without getting this too congested here, how about I just, we'll look at just the pink. We'll look at the 1 all the way to 10,000. This is kind of the meat of the addresses. So it's kind of a mixed bag. We can see that the 1,000, 10,000 coin tier, this is the largest of kind of the active traders. It did have this big pump. This was back during the ETF announcements. And they peaked here about 2 weeks ago and then started to decline. The 1 to 10 line is continuing to go up, which is somewhat normal. But the 100 to 1,000 is going in reverse right now, as is the 10 to 100. So we would really need to see a little bit of a pickup from these tiers combined, which you can do, by the way, if you just click on merge right there. And let's say I want to look at all 4 of these together. And I can control click to sort of isolate that one. Yeah, so I mean, it peaked about a month ago here, and it's actually down slightly. Combined, these 4 tiers hold a little over 3/4 of the supply. And yeah, it doesn't look like there's a ton of accumulation going on. It's kind of just staying flat, as has Bitcoin's price. So it's not a coincidence. And just curious if we can see if the amount of addresses looks any different. And I'm not really seeing that. It looks like maybe the 100 to 1,000. They're seeing a little bit of an increase. The 1,000 to 10,000 is going down. So yeah, it seems to be pretty quiet right now, Max, in the context of these whales compared to the small addresses. It's showing that there isn't really any major accumulation to get super excited about right now, unfortunately.
Yes, yes,
Now,
we
as
should be
mentioned,
very well aware. And I actually leave some time after with majors. I would like to cover today Maker as a separate case. It's an interesting behavior
yes.
analytic example. Maybe next week, maybe we'll see if we cover curve. It's not ripened yet, even though it looks quite good, but Maker today will be interesting, plenty of metrics. So I think we need at least 10 or 15 minutes. But you're right. In the Maker, actually, it's very topish. Just a teaser, small teaser.
Yeah.
Even though we're still holding it, expecting for one last blow off top. But I can imagine if Maker top off, it might pull as a consequence, or maybe some money will flow back to Ethereum, but we'll see. It's a kind of too complex thinking. I don't generally like too complex thinking. Crypto or investing is a bit easier, more emotional. You're showing, yes, there are some metrics which don't look good for Bitcoin Ethereum, yeah. But it's more like 50-50. There are some good, some not so good. I'm more neutral and basing on, as I say in the beginning, my assumptions on general media, which is prevailing positive, so I don't like it. But maybe it's just a question of time. 2-3 days passes, and then they come out, oh, how situation is bad, and then maybe it can go up. Yeah.
Mm-hmm. And we've said on many occasions, these kinds of circumstances where it's kind of 50-50, some assets are showing promise, others are declining. These are what really make those big professional traders money. These, everyone makes money during the bull run, obviously, and people brag about their portfolios going up, in November 2021 when everyone had already seen their portfolios go up. But this is kind of what pulls the men out from the boys, if you will, because the ones that are really paying attention to metrics like the ones we're showing, they're the ones who are finding opportunities to still make money despite Bitcoin being stuck in neutral in that 28K to 32K range as it's been for so long. The ones who jumped in on Maker and, Shiba and XRP, obviously, and getting in, a month ago versus right now, those are the ones who are really able to distribute their profits into something else now. Whereas, people who've been stubbornly in an asset that isn't doing so well, Cardano, for example, maybe they're struggling, and you really start to see the cream rise to the top right now with the traders who are paying the most attention despite the underwhelming market conditions. They're the ones who are separating themselves. So keep that in mind, and remember that there's always money to be made, even when markets decline, obviously, if you feel so inclined to short. But it's not exactly like shorting time right now. It's more just flat time where you need to kind of pick your horses in the horse race correctly. And there's data here to do so. So we're not just showing these metrics for the fun of it. We're showing them because they provide good examples of how to identify the assets you want to look at and seeing not just through Bitcoin, but through the lens of your own assets that you're most interested in, and seeing if there's conditions that might look even more positive than what we're seeing for Bitcoin, for example. So that being said, we can look at something like MVRV here, and we'll look at the overall Sandsheets model in a moment as well. But before we do, take a look at what's going on with Bitcoin, especially the Z-score. And if you're not familiar with the Z-score, it's essentially a tool to allow us to see the divergence between all different time frames for average trading returns, blend it all together and kind of see what the standard deviation is versus the mean. So minus all those big words, it really means the higher up it is, the more trading returns are above the normal expectancy. The lower, the more below they are. And ideally, as you would imagine with MVRV, you actually want to see it below. And you can see over the past 6 months, this dark blue line representing the Z-score,
But
it's consistently
Brian, from
been...
my understanding, how Z-score differs from normal MVRV, be it 30-day or 365 days? What is the difference between Z-score and normal MVRV?
Yeah, so it's looking at multiple time frames. It's essentially, instead of looking at the average percentage above or below zero, it's looking at the standard deviation of how much MVRVs overall across multiple time frames are thriving or falling below expectancy. So it's kind of a blend of many of the different time frames. So if we go back like a year, you can see, you know, the Z-score is kind of averaging out the long term and the short term.
And Z-score takes average between 30-day and 365 days MVRVs, or which ones?
As far as I know, it's all of them. It's not even looking at any particular interval. It's just looking at
specific. Either you look on MVRV like general, okay, or then time bound, because it's a machine, a specific source of data.
No, you're right. You're right, and maybe it is looking at just our available ones. I know like that we had some definition. Yeah, it may just be all of them, from my understanding. I'm trying to see if there's anything on the Academy that may point to it. We have the overall MVR ratio here on our Academy. I don't know if we have an explanation specifically on the Z-score. Not from what I'm seeing. I wish we did, but that has been my understanding, and it's usually the way I've seen it function. It's kind of like a weighted sentiment, where this number, right now in the top left, it's showing 0.65. That means that it's 0.65 over the normal standard deviation.
Okay, well, I understand to some degree, but I think we need to ask our developers how they exactly do this one.
Yeah, of course. We want to give the most precise definition possible. It could just be all of the intervals together and then used as a standard deviation. But we'll see. We don't want to give any information that isn't 100% accurate. I can just tell you that high is still a sign that prices are toppy. Low is still a sign that prices are on the bottom end. But you can also look at the 30-day, which is a good representation of a short and midterm time frame. And you can see that right now, average trading returns are about 1.6% below the normal 0% resting state, whereas 365 is 18.8% above. So you've got conflicting results right now, with the shorter and midterm struggling a bit. Long term is still thriving, which might surprise people, you know, where in this period where it almost seems like people are disappointed about Bitcoin at 29K, despite, you know, in January, everyone was so excited to see that it had just rebounded from 16, right? Because that's how bad things had gotten back here when we were, you know, still coming off of the FTX implosion. People were talking about sub 10K here. So now we're up at 29, but everyone is sad just because Bitcoin is moving back down, right? It's all about the recency bias of, you know, sentiment and how 32K is still well above where we are now. So everyone is saying, oh no, you know, Bitcoin is about to drop back down. But long-term wise, we'd like to see the MVRV just come back down, maybe below 10%, as a good sign that an entry point is justified. You know, last time we saw that back here in mid-June, of course, it was aided by the ETF announcements right around here. But even still, right, the lower you can get the long-term MVRV and short-term MVRV, the higher the probability of a rise. That's how it works. It's not just a toggle switch where both of these go below zero and that's an auto buy, but it means that the probability is exponentially better the lower these ratios are. So pay close attention to MVRV, which right now looks pretty neutral for Bitcoin. But as I mentioned, that's not really the full story. We can also look at altcoins, which overwhelmingly are still showing semi-underbought or underbought signals. because of the fact that they've been bleeding so much, you know, there's a lot of opportunity here. It's going to, of course, do a refresh, but outside a few of the anomalies that we're showing, like Maker, um, average trading returns are showing that right around 90 to 95% of assets have traders well underwater right now. And you know our mantra, you know, buy when others are panicked, buy when others are showing FUD toward the crypto markets. And there's a ton of that right now. You may not see a ton of social media commentary about how bearish people are because of the bullish bias that is on, you know, crypto Twitter and crypto Reddit. But overall, the average trading returns tell the story, and of course, funding rates are the other thing you can take a look at. And it does look like, you know, leverage longs, leverage shorts, they're mostly pretty dormant right now. We see a few exceptions like Compound, which went on a big run this past month. Basic attention token, interestingly, is getting shorted as well. Axie Infinity always seems to be getting shorted. I don't quite understand why, but it's almost, from what I've seen on Binance, it's just constantly being shorted. Tezos as well, and even Synthetics, to name a few other assets that are being shorted. But overall, yeah, it looks like on the trading end, there's maybe a slight negative bias toward markets. And of course, just based on average trading returns alone here, definitely a negative bias for other assets, even if Bitcoin looks fairly neutral. So we mentioned funding rate and MVRV. I may want to look at a few other MVRVs once this loads again, but for now, okay, there it goes, right on time. So this is looking, as Maxim suggested, this is looking only at MVRVs that are in the midterm range. So it's like the 30, 90, and 180 day MVRV. So right now, it looks like, you know, we've got a few like P Network, Phala Network, QuickSwap, Super Farm, Gala, Phantom. It's not a coincidence. These are probably projects you haven't really thought about for a while. But right now, those are the ones that are showing the biggest opportunities because they've just been bleeding so much. So if you want to take a chance on certain assets that are well underwater right now, according to MVRV, those are the ones to really focus on. But you can see almost all of them semi-underbought across the board. And the only exceptions I see are Compound, Kyber, Maker, and StormX, and STPT, which just popped up there. So pay attention if you're looking for, you know, an objective project that is a buy low opportunity or a sell high opportunity. This really gives you a guide when it's hard to actually identify what is a low and what is a high. All right. Besides that, you know, whale transactions continue to go lower. We looked at kind of the supply distribution and saw that the large addresses are kind of just sitting in neutral right now. And this kind of justifies that there is not a lot of action going on in terms of $100,000 plus or $1 million plus whale transactions. As far as we touched on supply distribution already, let's look at the ratio of transactions in profit versus loss. And then I want to take the remaining time to look at Maxim's templates that he shared.
Yeah, I dropped it in our Discord.
Perfect. So I'll jump over to that in just a moment. I do want to point out Bitcoin has shown a big loss ratio between the 26th through the 1st, and it's still low now. So these are actually pretty rare, at least in recent times. This is the lowest ratio of on-chain transactions at a loss since March. And we remember what happened in the middle of March, right after this week. That's when prices exploded. It doesn't mean we're going to see a repeat of that, but it does lend to the probability of some recovery. It could be a short-term one, but right now we're seeing signs of a lot of capitulation, people getting bored with Bitcoin, maybe bought above 30K, and they're saying, you know, screw it, I don't want to be in Bitcoin any longer, while it's just kind of slowly declining. And this kind of capitulation is exactly what you want to see to help show that a rise is coming. All right. Yeah, and XRP is the lone one that showed some profit taking. And those would indicate there's a higher probability of a correction. So let's look at your template really quick here, Maxim. The wrapped Ethereum. What are we looking at in terms of the Aave V2
actually,
metrics
right,
here?
we have two. Because now the one topic I want to discuss here is the redistribution of liquidity in lending borrowing protocols. And this is what you have on the screen. And another one, top structure for Maker, as an example, how I usually analyze market and try to spot the top, or build my skills trying to spot the top. Because I do believe this is the most important skill. Everything else we're discussing is all good and interesting, but if it doesn't lead you to make a decision, is it the top or not? Yeah, this is not going to bring you much further in crypto investing or analyzing the market. Most challenging skill. Try to spot the tops. You will be wrong from time to time, but still keep improving. But back to this one. What we see here, right on this chart, is how much is supplied and borrowed on our version 2. I think it's there. So you know, our moved, or let's say not moved, they created version 3, and people did not move much, or either being lazy or not being motivated. The difference in yield was neglectable on both protocols. And a lot of liquidity was on version 2, like majority was on version 2, and quite a little, maybe 10-20% only compared to version 2 was on version 3. I know that Stani and our team, they wanted, but how? You cannot enforce people. Now what happened after curve was attacked. By the way, it looks like a hacker of curve now sending back the money. We'll see how it impacts the price. And when these things happened, people realized the majority of credit from Michael, from Curve founder, it was on our version 2, and it works in a way that if the bad debt appears, it spills across the whole our version 2. It's not only for asset borrowed, I think it was USDT. It's everything, like it's everything they together in one bunch. So some people realized, start pulling out, and you can see how this process accelerated. This last drop for last week is exactly because of potential impact. And you don't see on the chart here. Another chart is the same, or if you scroll down, you will see USDC is the same, even more critical. USDT, everything now moved out of version 2. Yeah, but it did not flow yet everything to version 3. So, and it's an interesting question, where do you go? I assume, or we'll be doing next week research, kind of deep research, where all this money, and it's at around 200 millions, which pulled from our version 2, where it is a go. And also Compound, like everywhere, from old OGs in borrowing lending, all liquidity supplied decreased dramatically, really dramatically. And it went somewhere, and it's important. This kind of moves when it's obviously data anomaly, or it's a signal, and it has to be analyzed. And there is a specific context to it. We know what triggered, but by revealing behavior of those stablecoin holders, we can understand more about the market. For instance, if we see that they extracted 200 millions out of old version, and only 10 or 20 they put back into other protocols, it means they're worrying, or they don't think it's a good way to put back into protocols. Yeah, then last question. Okay, did they buy any altcoins or any shitcoins for these stables? If they did, okay, they were optimistic. Yeah, if they bought a lot of tokens, different tokens, then we'll have to come out and say, okay, that's very topish. If not, if they just keep on their addresses, okay, then it's a buying pressure. potential buying pressure. Yeah, you can come out to very deep understanding of the market if you understand behavior of those people who extracted around 200 minutes. Actually, I think it was even a bit more. It's substantial amount of money. In terms of DeFi, it's actually a very substantial amount of money. Also from 3 pool from Curve was moved, but it's understandable that maybe we're afraid of that. It's also the code is not safe, which appeared to be not the case. Still, there like 50 million were moved away. Not 50, a bit less, 30, 40. And here more than 200. We're talking about very big numbers. Someone took it out from protocol, not someone, many people, and they did not move it back yet. So we'll be observing now the next week what will happen to this big chunk of money. Ideally, price now starts increasing and they start pumping and buying Ethereum, good. Altcoin from top 50, also good. Altcoin from less than top 100, not so good. Yeah. So this is the way of thinking. I'm just explaining to people how we will analyze it, trying to understand what might happen next. And this chart we can share actually at the end of stream. Just share the link. If you have account, you will see it right away. If not, just make a trial. You will see it for 2 weeks. 2 weeks is enough to learn some quite advanced analysis beyond basics. Yeah. So that was about stablecoins. I spent quite some time analyzing it lately.
Yeah. This is very interesting, and I just shared it with Gary, who could probably put it in the YouTube chat when he gets a chance. I wanted to ask about this compound supply and compound borrow as well, because we just saw the biggest spike since March here.
Yes.
Any thoughts on how this may impact markets?
Well, to read properly this chart, you see compound supply APY, compound borrowed APY, and then bracket USDT. So we're talking about USDT as an asset being supplied and borrowed on compound. Yes, you see the spike, but what causes this? Yeah, scroll down. I think it was the one next or one before chart. No, then go up, go up, go up, go up. Oh, okay, it's not on the chart. So we can, it will take us some time, but we could add what we need to add here, how much of USDT was supplied and borrowed on compound. Then you will see, is it because of a supply side got smaller, or is it because demand side got bigger? Sometimes it's even both. Supply got less and demand got more because people need to pay debt or I don't know what. So by APY itself, it's an indicator that something happened, and then you go on a level lower or on a level deeper, you understand what caused it. Yeah, it's USDC already. Yeah, here. Look. Just go down. Yeah, exactly. No, one
more down.
Yeah. USDT.
Okay.
No, one more down. It's our.
Oh.
Here, yeah. This is compound USDT. You see. So what we see here, it's very choppy action, but exactly what happened. Highlight a compound total supplied. Just a mouse over. Yeah, you see, so supply kind of went down, and if you highlight total borrowed, yeah, it went up. That's the reason for. Then you can go even deeper. There are other metrics which shows did we get a new borrowing or old borrowing increased, or there is maybe some liquidations. Even though liquidations are likely, the market did not drop much, but who knows? Maybe it was enough. So it's obviously that the trend of removing supply side impact actually everything on compound in our version 2, and in some cases demand side even increased, which was a kind of sign of stressful market. And you know, stress is if market survives, it all can give you a push.
And this is quite fascinating. We're seeing some actually pretty big spikes here just right in the past couple days in the beginning of August, with a big spike in compound supply and compound borrow APY for DAI right now. My inclination is this is positive for Ethereum, with DAI being so associated with that asset. Is that your interpretation with this kind of?
Sorry, I lost you, or at least I can hear you.
Can you still hear me okay right now?
No, yes, yeah. Yeah, back.
Okay. Yeah, I was just asking this big spike in DAI over the past couple of days for both compound supply and compound borrow. What would this mean directly?
If both grow simultaneously, borrow and the supply, that's not a problem. But I think supply decreased. Highlight supply. It's API. Just highlight one after the next total supply. Yeah, exactly. So you see, it's okay. So supply just try to increase, but still keep dumping. People moving out of. They don't trust that it's a risk reward is good enough. And then borrowed compound. The last metric, compound total borrowed. Yeah, it's stable, even increasing slightly. So demand is higher than supply. It's so classic economy. You're even surprised to see it working in crypto. Yeah? but for lending borrower market, it works. Liquidity is kind of being taken out from, at least from all protocols, and demand is still there. So in a sense, it's a healthy process, as APY being as low as I think it was 2.5, 2.6%. It's ridiculous. Yeah, in the real world, how much you get for USD? I mean, between 4 and 5%. Depends on maturity of the bond. And here it was only 2.5. Now it's actually close to real world. And I think Maker kick off this process when they introduce 3.2% if you place for DSR in their protocol. So the others will follow. If people just taken out from these protocols, they're not satisfied with so low yield. And then it balances. It's actually quite fascinating to see how by moving, and then we're going to the next topic, like a Maker introduces things that they pay 3.2 till 3.5 for DAI being placed in DSR model. And of course, people just moving out of compound, I place it there. It's a kind of simple bet. And it balances. Yeah, as demand is still there and compound hours, so the API grows, and I think it is already around 3%. So we increased to 3% very fast, 3.2 even, which is good. And Maker by themselves introducing this real world asset in terms of tokenization of treasuries. It's a bold move, risky one, but bold move. But I don't know if you want still to hang on Aave or Compound, or we'll move to Maker.
Yeah, let's look at Maker now. I think that dashboard is something that our audience may find very handy, and I'm going to look through it more myself and maybe share some insights on our Twitter. But let's look at exactly what's going on with one of the best performers.
I shared on Discord.
Okay, perfect. Yeah, I shared it with Gary, who put it on YouTube, so they should be able to see that.
No, I mean, I shared for the Maker.
Oh, I see. Let's see. Got it. So it's going to be this template here.
Yeah, and it's
okay. We've got a.
Yeah, it's a generic. I call it ERC20 behavior setup. And you see on the first chart, there is plenty of metrics. I use only normally half of them, sometimes highlighting or deselecting some others. And for Maker, and in general, most famous, or actually most useful to set up framework is multi-volume divergences. It sounds complicated, but it's simple. When the price keep pushing, but you see that plenty of metrics representing activity, be it traders or hodlers or people who talk on social media, they start declining. There is a divergence here. Price is not justified anymore by amount of on-chain or off-chain activity. So, and Maker is one of the classic examples right now. You can see right now on this chart, on the first one, it's a simple trading volume, there's gray bars. They still keep trying to grow, but they not yet catch up with the previous highs. Yeah.
Yeah, lower highs.
Kind of, yeah. But that's not the most interesting one. If you check other lower on the chart layout. Exactly. So open any of them actually, yeah. So MVRV is diverging quite severely. So you saw that previous stop was already a dangerous one, but we convinced ourselves to hold, as I wanted to see divergence. Now it's here. This not red at the bottom, but more red filled area on a higher part of the chart. With price pushing up, it just get lower, lower, lower. It also means that those who joined later, they're getting less profits, which is correct. But it also means that people not realizing their profits. If you look at the next chart, this is what you will see, they're more clear. Yeah, this one. So this is actually, if we see one more top on a still declining active deposits metric, then it's the most probably risky. And actually in trivial, not non-trivial metric, as it's not used, I think, by anyone in the market. But what it shows, how much of active deposits is happening to exchanges. So how much intention to take profit you can see in the market. And the price going up, and this metric going up, it's a very good sign. Yeah, you see the spike of yellow line. Yeah, exactly. Yeah, that was good. So it convinced me. The price of maker decreased, and at that time people say, okay, I need to take profit. They push it to the exchange. Good, it was good enough for me to hold it. But you see the next going up and down price. Yeah, this metric is just going down. This is already a very dangerous sign. So they got relaxed, or they say, okay, no need. We will just keep pushing higher. Why do I need to prepare myself to cash out? Yeah, there is no intention, or at least it's much less than it was just a week ago. So it's one of the top 3 red flags when you see this pattern. And but you can also see, I think, in directive addresses, some divergences that the network activity is slowing down. It means in general, people not considering to do much with their makers. Okay, it's a good setup. I will hold it. And yeah, close it. What is the next chart on this chart layout? Yeah. So circulation slowing down. It's one of those classic setups. When you see it, you feel concerned. If even price action looks cool, but when you see on the metrics, wait a second, why the prices keep increasing and pumping, but network activity just slowly dying out? It means no newcomers or less newcomers, and those who bought feel less inclined to do anything with their coins, which is a rarely good sign. So wanted to share it, and again, this chart layout can be applied to any ERC20. It's just sometimes some metrics are more important, some others are less important. But once you practice or you understand an approach, it reveals a lot. It also helps during the time when you better hold, and helps identify the time when you better sell, which is the main purpose. If you don't realize profits, well, this game has not much fun.
Yeah. No, these are really fascinating metrics, Maxim. I think, especially looking at deposits and daily active addresses here, I think there's a lot of alpha here that can be seen when you see these big spikes. My inclination is when I see deposits, I normally expect a bit of a downswing, but when it's happening on a bit of a rise like this,
that's fine.
I see that it's
two sides. You're right. It's a first initially. It is, of course, it impacts because there is a selling pressure, but it also reveals that people were concerned and worried, kind of wall of worry. So the market has power to grow, assuming the general trend is not terrible. Yeah, because we see this sales rally also in downtrend. But assuming the market either neutral or ranging like Bitcoin, Ethereum, or slightly growing, this is a very healthy sign. You're right. It does impact short term, 1-2 weeks maximum. Price is depressed, but once the selling pressure is absorbed, it grows even more because people were worried before, and it's easy to grow on worried market. I mean, you can grow quite fast. So, and this actually has 2 metrics. One is active deposit purely, and another in relation to total directive addresses. yeah, percent of network activity, how much of it related to deposits into exchanges specifically. And if you see 20, 30, 40%, you say, wow, this is a really worried market. Every second transaction is just goes to exchange. Okay, either arbitrage or just depositing. So that's a nice market. I keep it, yeah. This kind of things. Yeah. Or I accumulate, accumulate if it markets dumps after such intensive exchange deposits. Sometimes it does.
Yeah, I really like these metrics. There's a few that I'm really seeing for the first time here, and I think there can be some legitimate alpha here if you really dig into them. And like we say, viewers, when you look at one particular metric, don't just use it as the end all be all. Compare it with the others at the same time, and you can really start to paint a picture as to where prices are going to go next to a pretty high probability. And I'm pulling up some of our main metrics as well. We already touched on trading volume going up. We touched on daily active addresses, of course, being pretty neutral right now in circulation. And we haven't really looked at this yet, which is the 30 and 365 day together. We already saw on your template, Maxim, that the 30-day is understandably up high. Maybe not as high as you would expect, though. It's interesting to see that the 30-day was higher back here in the beginning of July, even though prices have gone up since this point by 44%. The 30-day MVRV is only at plus 15 when it was way up at plus 40% on the 4th of July here. Meanwhile, the 365-day is very high at plus 58. Yeah, so I do think naturally there will be a cool down pretty soon. But I do like that some of those metrics Maxim shows even more precisely when the top is, right? MVRV is more like a general one. Funding rate pretty flat at the moment. Whale transactions, I can see they're starting to cool down a little bit. I would imagine that these whale transactions were just pushing prices up further. They were not dumps, they were accumulations. And if we look here, we can kind of hone in on whether that is accurate or not. Maker is priced about like 1,300. So 1 to 10, I see that they're moving up. 10 to 100, they're really moving up fast. So that's kind of a shark tier right there. 100 to 1,000, that is moving up as well. 1,000 to 10,000, also moving up. And then not until we get to the 10,000 to 100,000 tier is when we see some actual dumping going on. So that's likely going to be exchange addresses down here mostly. But I think the main ones here, 10 to 100 all the way up through 1,000 to 10,000, seeing how much they're rising right now in terms of the supply that they are accumulating, that's a promising sign. So even after there's a downturn, watch how those tiers behave. And if they're still accumulating as Maker moves down, hey, we could be on our way to 1,500 or 2,000.
Well, I wouldn't go so far, but yeah. Generally, yes. What I'm saying here at the top, it can be temporarily or intermediate one, because exactly what you're looking now. It's long-term actually gives me quite some hope. Whenever I see mean dollar invested age start declining, it means redistribution happens. So those who've been whatever long enough or early enough, they're selling to newcomers. It means there is a demand from newcomers, or there is a story or narrative or whatever which newcomers believes. And in many cases, actually, in most cases, it means we might be facing a major bull run. Yeah. I wish we had the same for Bitcoin and Ethereum. We don't yet. So it kind of we should dump our expectations. The difficult will be for Maker after, let's say, next stops corrects to push up if the whole market collapse. I mean, not even difficult, almost mission impossible. But these metrics we should observe. It's a very good sign. I genuinely like it. Yeah, this heavy redistribution is good. And it's you see, it takes time. It's not like a sudden drop. which is most of the time, I know, some all-time hodler, maybe change a coin or whatever, vesting, many cases, it's just you see like it's happening. Yeah. So the long-time hodlers start taking prices, and it's a kind of also coincide what we saw with exchange deposits. And then the newcomers come in, it's a good sign, yeah. So long-term, I will, if even we sell our position and make, I will keep watching it. I think we will sell our position. But I will keep watching it, yeah.
Yeah, definitely. And the last thing I want to show, we have a mean dollar invested age Sandsheets model where you can actually catch, if I can find it, you can actually see when there is going to be some dormant movement, which is a great way to kind of validate that an asset may be on a mini run here coming up soon. And that is undoubtedly what happened with Maker, you know, as Maxim was showing. You can see how there's a drop that started right around mid-July, and that coincided with this big rise. Very normal when you start to see, you know, a big move. It's coinciding with a lot of older assets kind of moving away from those addresses. And as we can see here, this is staked Ethereum, for example. That's seeing a big downturn right now with a lot of dormant coins moving. Other than that, it doesn't look like there's a lot right now. I'm making sure the data is filled. Yeah, it is. So in terms of mean dollar age dips, you can look on a daily one and actually see which ones are seeing the biggest dips here. Wi-Fi had a drop yesterday. XRP the day before, wrapped Bitcoin, Curve on July 31st. So there's a few different candidates you can pay attention to if you look at this model. But yeah, I think that's about it. I think Maxim, you did a lot of showing of some new metrics that I'm fascinated by, and I'd like to dig into them even more next week. But for the sake of time, maybe we stop it here. Any final comments you want to make about the markets?
No. Okay, summary. Maybe someone joined during the conversation. We are generally open for breaking up. 2,400 Ethereum, 39,000 Bitcoin. But we have a blocker. Positive attitude from media. Yeah. Some influencers, some bloggers, and publications. Cointelegraph today. We don't like it. It's not how you usually see market breaks up. So we might be, we should probably embrace ourselves for a few more days, boring and sideways. Exceptions happen, or maybe even going down. Indicator sees that public media turns negative. So it's the best environment where you can expect, okay, now we can go higher. As long as we don't see it, we don't feel comfortable. Then on Maker side, we're about to build a top, which might coincide with a temporary top on crypto market, maybe not. And there is plenty of things happening in DeFi space, redistribution of stables in old protocols, some of them moving to new ones. And as a matter of fact, we didn't touch it at all because it's out of scope of our behavior analytics, but there are plenty of DeFi 2, or how you call it now, maybe DeFi 3, no, let's call it DeFi 2 protocols, which are doing amazing things. They don't have yet a lot of liquidity. It's stuck somehow with old protocols, but we might see it now. And if it happens, this newer ones actually allow people be or encourage people to be more active, and it's on many times. It's also on cheaper networks like on Arbitrum, most on Arbitrum. So stage is not as clear where we say, okay, we are 80% sure and we go a prediction, let's check it next week. Sometimes I do it. This week is not the same. As I miss one specific piece of information, public media, social media should be negative or keep quiet at least for 2 days without coming up with some good news or big expectations. If it happens, okay. Then we go up. This is a summary. Yep.
Yeah, I think that's a solid summary. It's an uncertain time right now, but overall, the patient usually are rewarded, right? And you don't want to over leverage right now. There's a good chance we could be dropping further. Sometimes you need a little bit more pain before there's some light at the end of the tunnel. But based on sentiment starting to get negative, I'm seeing some good signs popping up. This is maybe the most negative I've really seen markets since early March. It's been that long, about 5 months ago, right before prices surged and Bitcoin went above 25K and eventually 30K in April. But yeah, stay tuned. We'll have some good updates today. If you guys haven't checked it out, make sure to look at our XRP Insight. This is more of just a general how-to guide on how to use many of our best metrics that I wrote a couple days ago, and it's very useful if you're starting to learn our metrics and want to know how we can analyze markets quickly and efficiently. Use these metrics that we talk about here. I give an explanation on each metric and then how to use it specifically to predict markets. So whether it's MVRV, funding rates, whale behavior, all of the best ones are here. And you know, myself, Maxim, and the rest of our staff, we're here on Discord to really help navigate these charts for you so you can feel comfortable using them and you're not confused. And we're always going to help ensure that you're up to speed on them. So don't hesitate to reach out to us. And in the meantime, you know, stay safe, guys. Stay patient in the markets. Pay attention not just to us, but you know, if you have some technical analysis that you're looking at, they can be useful in supplementation to what we show. And that's about it. Yeah. Brother Max, thank you as always for joining.
Thanks.
And I'm looking forward to next week, guys. We'll talk to you soon.
Talk to you. Take care. Bye.